You were listening to chartingwealth.com for Thursday, the 9th of November, 2017. As we look at the charts on this lovely day at the end of Wednesday, going into Thursday, we see the S&P 500 up 0.18%, the Qs up even higher, 0.41%, bonds down 0.23%, gold up 0.35%. Let's jump first, as we always do, into the S&P 500. By the way, just finished writing chapter 5. It's on candlesticks, both standard and Heiken Ashi candlesticks. Hopefully we'll be recording that this afternoon or tomorrow, getting it up. Of course, it will be provided first and foremost to all of the friends that subscribe to chartingwealth.com. If you're not a subscriber, you're not going to get it. So again, what do? Go to chartingwealth.com, sign up for our daily market reviews. You get all the bonuses. You get the new chapters as they come out in the book, and we're giving out prizes for folks who give us the best recommendation for edits and such for each chapter. And again, I hope to give out a book free on each individual chapter. Again, if we get super recommendations from folks, the best one in each chapter will be given a free autographed copy of the book when it comes out. And again, we're underway. Appreciate all of your patience with it. As you know, we spend lots of time every day just putting this broadcast together for you, absolutely free. Then finding time on top of everything else to put together the workbooks, the worksheets, all of the special training, and of course to write is quite a load of work, but we are slowly but surely knocking that out. My goal is every other week to be putting out a chapter going forward. So please review that for us. Let us hear from you. Let's jump into these charts. 10 minutes is all we ask. What do we see going on? Well, of course, we had a weekly vertical crossover on the S&P 500 going up all the way back on the week ending the 29th, Friday the 29th of September. We've since seen the market flying up. We see so far this week, again, we're just finishing up the third day of a 5-day candle, so we're just over the hump. And what do we see going on? Derivative oscillator looks like it's lost a little energy so far, and we see another up candle, not above the Bollinger Bands as it had been before, and not quite in the trend line. In fact, it's fallen a little bit, but again, movement is above the weekly and the 2-day. We'll continue to watch the weekly chart as it progresses throughout the week. Don't call a candle until, of course, that candle is done, and it is not done yet. What do we see going on the 2-day candle? Well, it's tracking sideways as far as the derivative. Well, the derivative oscillator is gaining some energy. The price percent oscillator is going sideways. Price movement is still going up. Have a little bit of concern as and again, this is just the first day of the latest 2-day candle, but price movement has not gone above where it was on the prior 2-day candle. Derivative oscillator is gaining some energy, but this sideways sliding PPO is of some concern to us. We'll just continue to watch it. But again, up a little bit for the day, 0.17%. Take a look at the 4-hour chart. It is moving away, the price percent oscillator, from the red signal line just barely. You have to focus in on it. Derivative oscillator is continuing to lose energy, so just watch. We did have nice price movement up at the end of the day, so keep your eye on the prize. You have a crossover, and you've been riding this baby up. You've been riding this pony since we had the weekly vertical crossover. You have done quite well. So again, you see a rotation over strong on the 4-hour chart. You might pull the plug. You can always jump back in when the price movement allows you to do so if the 2-day and the weekly continue to move up. But again, remember, price movement is still well above the 2-day and the weekly. So for what it's worth, again, weekly vertical crossover is magic, is it not, my friends? Just beautiful. Remember, we're not forecasters. We're trend followers. What do we see going on the Qs? Even more beautiful, up over twice the amount that the S&P was for the day, 0.40%, with that weekly vertical crossover on the week ending the 27th of October. And we continue to see strong up movement well above the Bollinger Bands so far this week and in the prior week and in the prior week and the prior week and the prior week, all the way back to the 13th of October, the week ending then we've seen movement above the Bollinger Bands. So and remember, those are the volatility bands. So volatility is outside those bands. Typically, there's no oxygen to breathe out there. The Bollinger Bands will continue to move up, and price movement usually moves within those. But when you have strong price movement outside the Bollinger Bands, it's telling you that it is greater than the prior volatility. So we see that increasing, which makes our charts easier to read, and typically the price percent oscillator more accurate. Derivative oscillators continuing to gain energy, as is the price percent oscillator, staying about the same. On the weekly chart, on the 2-day chart of the Qs, see things backing off a little bit with the price percent oscillator, derivative oscillator continuing to gain energy, and we have a nice 3 points connected on the 2-day trend line, and again, all price movement above the 2-day and the weekly. And as we take a look at that 4-hour chart, what do we see? Well, it's sliding sideways some as far as the price percent oscillator, still moving up some. Derivative oscillator gaining a little energy, but again, keep your eye on the price. We saw a little bit of a back off in the afternoon on Tuesday, but then moved up both in the morning on Wednesday and Thursday afternoon. So just keep your eye on things. We'll continue to watch and see how long this price appreciation occurs. Remember, our jumping in point was what, somewhere around the 150 point, something like that, 150, 151, and now up to 154.28 in a week and a half. Pretty darn good. That weekly vertical crossover is beautiful, isn't it, my friends? Okay, back to the weekly chart as we continue to push through these charts. The 20-year bond, remember, we're in a confirmed down move on that on the weekly, but it is weakening significantly. Weekly's moving up toward what appears to be a cross on the red signal line. Hasn't happened yet. We're not calling it. As we look at the 2-day chart, what do we see? Well, we did have a crossover on the 2-day chart going up. Price movement has been strong up on those candles, so we don't have any down trade, of course, at this point. Haven't, in fact, had a down trade since at least we had the 4-hour crossover in the afternoon on the 30th, Monday the 30th of October, and it's been strong up movement since then, tempered a little bit over the course of the last day with negative movement for the first time in a while. So things have gone flat and actually heading down on the derivative oscillator and the price percent oscillator. So keep your eye on things, even if there is a crossover going down, unless it's parallel with the 2-day, which it's probably not going to be as far as the 4-hour goes. There's not going to be a jumping in point until there's significant down movement. Although if things turn around, there's significant up movement by the end of the week, we may have a weekly vertical crossover going up. Of course, those of you who have subscribed to our text service, if you live in the States, you text the word Charting Wealth to the number 33222. The instructions are all there for everyone who subscribes to our daily market review in your email you get every day. Just go ahead and subscribe to the texting service for free, and we will give you those updates. Remember, the strongest thing we have happen are those weekly vertical crossovers that we've already talked about. They are absolutely beautiful and tend to be very profitable for our virtual trades. And that is just a reminder, we are not a stock calling service. We are an education firm. We are happy to share our knowledge with you, but we do not give market advice. We are an education firm. We want you to practice with us, get good with what we do, and then and only then, when you combine it with all the other knowledge you've acquired, do you go out and consider using your own money in ways you see fit. Let's jump into where gold is. Gold's in a confirmed down move on the weekly chart since it crossed over going down back on the 6th of October. Of course, prior to that, we saw the 2-day chart rotate over sometime during that week ending the 22nd of September. As we continue to look at things, we see derivative oscillators losing some energy. Price percent oscillator still headed down on that weekly chart. 2-day chart appears to be getting close to a crossover going up, though. So the warning bells have been going off for a while since we saw gold flatten out somewhere around the 120, 120.50 mark or so. It has been really flat, and on that, going all the way back to the 6th of October, we saw it hit around the same point and bounce off, where we're seeing that happen again on the 2-day chart. Hasn't crossed over yet, but sure appears close to doing it. And of course, when we look at our prescient 4-hour chart, remember how accurate that chart is time and time again, except in about mid-December to early January, or when the market really goes just sideways, because remember, the price percent oscillator is not good. An oscillator is not good if it can't oscillate. If you've got a lot of sideways sliding, the oscillator loses its ability to really help you trend follow. So what have we seen happening lately? Well, we had a crossover on the 4-hour chart going up. 4-hour chart went up for a couple of days, down, then up for a day, down a little bit, and up again over the last day, ending on the afternoon of the 8th. So again, we've seen some price movement. And again, I don't know how to explain it other than this 4-hour chart is frigging beautiful when it comes to gold and how accurate it is over and over and over again. So keep your eye on the prize. Remember, if we do see a rotation over, when we do, and you've got strong down movement still on the 2-day and the 4-hour, gives you even better reason to jump into an inverse gold play, such as maybe buying a put in your virtual account. That's where we are, folks, as we end the day on Wednesday, going to Thursday, the 9th of November. We thank you so much for being with us. Always love to hear from you. cw@chartingwealth.com is the email address. And again, if you've not already signed up for our daily market review, you need to. Otherwise, you're not going to get the immediate release of Chapter 5 on candlesticks. Plus, all the other chapters are available to you there at the website and at our YouTube channel. Please make sure to subscribe to our YouTube channel and subscribe to us at iTunes and all the other podcasting services. You guys have made us as high in the world as number 4 in stock charting and stock trading podcasts. We so appreciate that. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.